Hi traders, and welcome to the Friday Market Watch on the 25th of November. So I've seen some pretty good market moves this week leading into the Thanksgiving holiday. It's stabilized a little bit now, but we'll jump straight into the charts and see if we can identify any trades for today or early into next week. Now we have to be mindful that obviously the US is going to be closed for the most part today. Most people take the long weekend off, so it's probably going to be a little bit subdued on some of the indices. But we'll start out here with the Aussie USD, and as you can see, we've seen a pretty strong move over the little mini base that we formed at this point here. No real surprise there. Like we thought, it needed to pull back. We expected that, and that's a reasonable pullback. Now, what we're seeing is actually a lightning bolt that's about to break to the upside. So now that it's actually come back to a decent level, now depending on how you look at that, you could definitely draw a Fibonacci retracement level on that and say, well, whichever swing you took, whether it's the big swing or that one there goes to a 38.2. You could have taken a smaller one as well, and that would have been still at a reasonable level, probably about the 23.6 if you only took that small swing. But realistically, I wouldn't have taken the big swing because that's really a little bit of a change. Generally speaking, when you are looking at these levels, you would either take it from that level there, or you would do another one from that to that there. And if that was the case, that would be probably about a 50. I'll zoom in, I'll show you what I'm talking about. So if we were going to draw another 50 Fibonacci swing, it would be from this level here up to the top. Okay, and as you can see, that one there is a 50. So, and all that is basically the 50s level of that move. So you got a 38.2 of the big swing or a 50 of the smaller swing. So regardless, you couldn't have missed it, and both of them are very key levels. So hopefully you were able to take care of that. The 20 moving average wasn't quite reached, which it really is probably showing the strength of the trend really. And as you can see, we're about to break to a new high, or it really wants to. The really key level that we're looking for here is around this 68.50. Still a little bit of work to do, but for me, it has to actually make a new higher high at this point here on a daily chart, and then we'd be fairly confident it's going to continue on with the job. If it starts to roll over from here at this point, then we're going to start looking for lightning bolts on the way down. Probably because there's been such a strong trend, I'd be looking at the very least for a 1 hour change of trend, so a series of lower highs and lower lows on a 1 hour, but that's where we'd play this one. So pretty good trading, I think. It's done what it needed to do, but it is at the level now where you probably would have taken profit because that's the first target really. So now if we get a daily close above this level, we can start looking towards the 68.50, but a roll over here on a 1 hour or 4 hour change of trend, and we can start targeting the lows here again at around that 66 cent mark. All right, we'll move over to the US dollar CAD. So this one also did exactly as expected, hit the 20 moving average, and now it's starting to track down a little bit. This roll reversal zone was very strong, and we consolidated there for a little while. So no real surprises to see that it actually held up. And of course, the 20 moving average is always going to be a really big stumbling block for a move against the trend. And as you can see, we're obviously in a downtrend now. We've got a series of lower highs and lower lows on the daily, so it's no big, well, it's a big time frame, big enough to certainly halt the 20 moving average there. So it didn't quite reach the 135 level, but very close to it, right? So, I mean, it got to only about 6 points away from it, and the 20 moving average pulled it right down. So that really shows the strength of the downtrend. It's in the middle of the mini channel now, so realistically, however you play this, it could go to either side just as comfortably. I would be probably anticipating that any more weakness is going to see it down. Like if we see more dollar strength weakness, which is likely, it's right on base at the moment, we'll look at that in a second, we're going to be down at the 132 level in a heartbeat. I think it's more scalping now on this one. I'd set these two zones up like we've got here. We've got the one zone at the 132, and we've got the other one at the 135, and just trade inside that range. Probably be very wary of the 20 moving average again if you are going long, but a move either way is certainly acceptable. It's just more that you can't really, until we get a daily close below this level or above that level, this is where we're going to play the game, and I think there's going to be some good scalping inside of that. So pretty good trading on it, and hopefully you're able to take your profits at the 20 moving average there from last week, because it certainly looks like it was heading up that way, and that was a very likely zone to be actually taking that profit. All right, we'll move over to the US dollar yen. This one here has the weakness that we certainly expected. Hit the roll reversal zone. Look, it's very common this week. We're going to be looking at a lot of the zones we talked about last week because they all hit And generally speaking, when the market was doing what it did last week after that consolidation period, it played the game exactly like we would have expected it this week. So ran into the resistance, as you can see, very strong resistance here. That was a support level right through there, which was always going to provide a really good level of resistance here. It was going to take a mighty move to break that without actually at least testing it. But this one, unlike the CAD, has already come back down to the bottom. So we've got to be very, very mindful. This is a bit weaker than the US dollar CAD in the sense that it hasn't actually stopped in the middle of the channel. It's come all the way back down to the bottom. So from that standpoint, though, we are at a roll reversal zone again. This is another roll reversal zone from here. We've got the resistance here, which should provide the support that it did here. Very easy trade in my mind on this one. If we get a daily close below the 137.50, we're going to start targeting the 135. And if it happens to pull itself up and starts tracking up, the first target's going to be the 142, which is where it hit just over here. And realistically, that's probably where I would leave it until it actually breaks above the moving average. I'd be scalping up to the 142 if it does a change of trend at this level. So a series of higher highs and higher lows from around this point. Or if we get a daily close below the 137.50, then I think next week we start targeting the lows again. So in my mind, pretty easy trading. It's being very, very technical, this one. So hopefully you're able to actually trade it. Keep these levels in mind, though, because when the markets are doing this sort of trending, it is going to respect all of these levels very diligently, as you can see it did there. All right, we'll move over to the dollar index. This one's looking like a very similar pattern to the US dollar yen in the sense that it's nearly on its lows again. We had a very strong support zone here at the 105. As you can see, we've got very strong support through here. Touched it here and bounced off. Hit our level exactly where we wanted it to hit, which is the other roll reversal zone. It was technical analysis 101 this week. Everything is played out absolutely perfectly to the levels. And then obviously it started to sell off, and it's getting very, very close to that bottom again at around that 105. Very, very close to it. Look, it's got a 200 moving average here on the daily, no question about that, and very strong support. It is do or die for the dollar index here. If it fails and breaks below the 105 on a daily chart, then we're going to start to see probably some really big weakness kick in and see the euro really rise. But we'll get to that in a second. If we find a bit of a change of trend and it starts to track up, the very logical target's going to be the 1750 again. Okay, so very easy trading again. I think we're in the right zones and they're behaving themselves. So hopefully you are able to actually set these zones up and scalp between them. There's no long-term trends at the moment. We're scalping in between the zones. All right, we'll go over to the euro, and this is about to break up. It really, really wants to break up above the 200 moving average on the daily, as you can see. And it's the exact opposite of what's happening on the dollar index. So if that 105 doesn't hold up on the dollar index, you're going to see a big move up on the euro. And really the first target's going to be that 106 level. You can see it's trying to break the 200 now. You don't want to preempt it. Look, it's definitely powerful here, but it looks like there's a fair bit of strength still behind this move, and it was a relatively shallow pullback, probably a 38.2 for that swing on this one here. And that's a pretty shallow pullback for a very small arm. If we went the bigger arm, it'd only be a 23.6. So if we went that whole distance, that'd only be about a 23.6. So it's pulling up pretty strongly, but it's got the 200 to contend with, and more importantly, that dollar strength base at the 105. So if that breaks and doesn't hold up, we're going to see this move up to 106. But if it does roll over and we see a series of lower highs and lower lows, say on a 1 hour or 4 hour chart, the logical target's going to be that 102 level here, that the first little bottom that it reached. That's the easy part of the trade. And but yeah, either way is fine. I think you can scalp this one either way, and you're going to get a reasonable chance to actually get some good technicals in it. So good trading. Daily close above the 104.50, and we start targeting the 106, and a roll over here of lightning bolt on the way down, and we start targeting the 102.20 area. Okay, so very straightforward. This is also a very important roll reversal zone in itself. I don't want to draw too many lines because you're going to think that I'm just putting lines there for the hell of it. But all these lines are very important. As you can see, that base where it landed was all this resistance right through here for days and days and days. You got weeks of resistance there. So it was important at that level. And that's the target that we'd be going for if it does roll over. All right, we'll move over to the last one, the US 500, doing exactly what we expected. It bounced out of this resistance, the consolidation, sorry, hit all of the zones we needed to. Start of the week, pushed up quite high. It's hitting the 200 moving average, and the 200 moving average on the S&P 500 is a big deal. Okay, so just be mindful of that. It's going to, look, I highly doubt we're going to see a lot of big action today, mainly because of the, most of the US is going to be taking the next day off, being a long weekend, and that takes away a lot of the power of the S&P 500. So short of something very unusual happening around the world. We're probably going to be opening up around this level next week. Now, if we see weakness, and it quite often does after the after Thanksgiving weekend, sometimes we do see a little bit of weakness in the market for a little bit. If it rolls over from here, okay, got a pretty easy target. The 3,900 is the easy target for this one. So it's certainly scalping. Okay, so if we start out next week and it starts to roll over from this point here, we'll aim for the 20 moving average or the 3,900, whichever is closest. That would be the scalp for the short. But if we get a daily close or the market does move today and closes above the 200 moving average, above the 40-50 level, then we start targeting the 4,100 for next week. So I think we're setting up pretty well for some pretty good moves next week, really. I think we'll just probably hang fire today, not see a big amount of movement. So just be mindful of that. But I think that if we hold up these levels at very, very key levels for next week, so we should start to see them continue on and get some good trades in for next week. Okay, I'm very sorry about my voice. I've nearly lost my voice today, so I excuse myself for that. I hope you have a great weekend, and I look forward to seeing you all next week, and hopefully you're able to catch some of these great moves this week because we had some very, very good technical setups. Thanks, everyone.